Hi, I'm Leon Gorin, president of PEO Leadership, a peer-to-peer leadership advisory firm. We're an amazing community of CEOs, presidents, and senior executives. Ask yourself, are you learning as fast as the world is changing? It's time for Ontario business leaders to band together for counsel and support. It's time for you to tap into the business wisdom of our peer groups and unlock new ways to grow. I want you to come out of this COVID crisis a better leader and your organization ready for what's next. Take the first step at PEO-leadership.com.
All right, I'm going to kick us off here. And so I'd like to welcome everyone this afternoon to our special PEO Leadership live webcast with our educational partner, RSM. And there are two special guests, two partners from RSM, Danny Ladouceur and Clara Pham. So for those of you joining us for the first time, a special welcome to you. Just so you know, over the last 4 to 5 weeks, we at PEO Leadership have been working around the clock, 7 days a week, helping our leaders lead through these unprecedented times. We've covered a lot of issues and opportunities today. We've talked about leading through crisis, working with diminished revenue, working remotely, cutting operational expenses, the where and the how, taking care of your employees, isolation, anxiety. Now people are coining that as cabin fever, sort of as the weeks continue to roll on. We're really here trying to help and make a difference to you, the leader, your families, and of course your organizations. And we're very fortunate to have some of Canada's strongest leaders with us today, who honestly have been absolutely amazing in supporting each other and the community as a whole. It's a time that I'm extremely proud to be leading this organization. So what prompted us today in terms of the federal government economics response? On Friday afternoon, I spent the week listening to many of our PEO advisory boards calls. And one topic kept coming up repeatedly, and that was managing one's cash flow and trying to get a handle on the government stimulus packages that have been released, yet seem to be changing rapidly as they try and they move to implement them. And I would tell you these changes continue to be ongoing. However, we thought, as it appears you all did, that an immediate better understanding of them is warranted. So let me introduce you to both Clara and Danny. Clara is the national tax partner at RSM. She practiced all areas of domestic and cross-border corporate income tax law, with an emphasis on international tax, mergers and acquisitions, corporate reorgs, and financing transactions. And Danny is a partner in tax, and Danny leads the firm's tax credits and incentive practice. So on that note, Danny, I'm going to hand the floor off to you. From a logistical perspective, what we're hoping here is about a 15 or 20-minute presentation, and then what we'll do is we'll open it up for Q&A, and I know there will be lots of questions. Danny and Clara will do their best to answer you. I'd ask that your questions be posted in the group chat. We'll be watching them, and or raising your hands as you do as a participant. You can actually raise your hand. Unfortunately, for those calling in, I do not believe I'll be able to take your questions. There's just too many people on the call, so it's not easy to identify. So Danny, the floor is yours. Thank you.
Very good. Thank you, Leon. I really appreciate the time that you've all taken in your day today. I understand how busy you all are. We've been a little busy as well on the tax and the incentive side as well, because pretty much every one of our clients are going through some difficult times and trying to figure out, as Leon pointed out, how to navigate this rather challenging time. Today we're only going to cover the main programs that are available. We do have all sorts of information on RSM's website under the COVID-19 Resource Center. Bear with us as well today. We're going to share information to you that is currently been available to the public. Things are very fluid, as you know. Things are changing very rapidly. In some cases, announcements have been made, but there isn't a lot of line of sight or clarity on the details of how these programs are being executed. So we'll do our best to cover their content with you today. as well as to answer your questions. So the first program I want to talk about is the Canada Emergency Wage Subsidy. It's probably one of the, if not the, the pillar, the more important program. It provides a temporary wage subsidy of 75% of remuneration paid between March 15 and June 6. It's eligible for corporations of all size, partnerships, non-for-profit organizations, and charities. You do your calculation based on remuneration that is subject to withholding tax. So salaries, wages, and other remuneration like bonuses, but it does exclude severance pay, stock option benefits, and the use of corporate vehicles. And we received questions as well, for instance, if dividends would be an item that would be eligible in the calculation of remuneration. And as far as we know, based on the rules as written right now, those dividends would not be subject to the 75% wage subsidy. A company also needs to demonstrate a reduction in revenues of at least 30% year over year for the month of March, April, and May. Once the government portal is open, which is expected to be anywhere between 2 to 5 weeks from today, you'll have to apply through your My Business account, and but you'll need to apply every single month and be able to demonstrate that your revenues using generally accepted accounting principles are down or are decreased from 19 to 20 by at least 30%. The total amount, there is no cap or ceiling that you can get as an organization. So that's the great thing. And the benefit is up to, it's only on the first 58,700 in compensation or remuneration for employees, up to $847 per week. There is an expectation that organizations that are going to apply and benefit from this program are going to do their best to top up the compensation of their employees back to pre-COVID-19 levels. So the government's willing to pay 75%. They realize that not every company is going to be able to do it, but they will cover 75% of the remuneration being paid between March 15th and June 6th. The other important point is, some companies may be eligible for the next program we're going to be talking about, which is the temporary wage subsidy of 10%. So obviously the breadth or the number of organizations eligible under the Canada Emergency Wage Subsidy is much broader because it includes corporations of all sizes, whereas the 10% temporary wage subsidy is only for effectively Canadian-controlled private corporations that benefit from the small business deduction or otherwise have $15 million in capital amongst the group. But the point is you can benefit from both programs. So, for instance, you could apply for the 10% wage subsidy now and reduce your source deduction payable on April 15 for source deductions collected against compensation of March. So you could take 10% of remuneration and take that amount and reduce it from the source deductions otherwise payable or that must be paid to Canada Revenue Agency now. Any amount you take under the 10% wage subsidy would have to be taken into account when applying for the 75% wage subsidy. So you can't double dip, but you can stack both programs. And obviously the temporary wage subsidy, you could start getting the benefit of the 10% like right away, effective the 15th of April. So the 10% wage subsidy was originally, the original program created, and it was meant to be 10% of remuneration for periods of March 18 through June 20th, with a maximum per employee for that time period of $13.75 per employee or $25,000 per employers. As I mentioned, and there is a cap, so there's that cap of 25 for most companies, that is a low ceiling. So that's and as I mentioned, the key point is the taxable capital employed by the associated group of companies cannot exceed $15 million. So if you have a group of companies, you do need to take that into account. But if the group of companies taxable capital is below 15 million, you then each legal entity or corporation within the group have an incentive of up to $25,000 per entity. So you don't have to spread the 25,000 amongst the group of companies. Each company can get their own 25,000 subsidy. The next major program that really could potentially help a business dealing with cash constraints is and the reduced amount of business activity is the employment insurance work sharing program. This is where you could agree with your employees to reduce hours of work. Instead of laying off a certain number of people, like, you could share the hours.
And it's not done yet, right? And
I'm sorry, did someone speak up? Okay. So the EI work sharing program is eligible for companies who have reduced business activities for a period of up to 76 weeks. You can agree with your employees to reduce the amount of hours worked. Instead of laying off a certain number of people, you can keep everyone employed, but with less hours. You can reduce the amount of work between 10 to 60%, and that can be quite significant. And whatever portion of work that is not being compensated on, the employee could apply for EI. So effectively, they may not get 100% of their pre-COVID-19 income, but they can receive, for instance, an example of 50%. They will work 20 hours instead of 40 hours a week with you. They can then get 50% of their regular pre-COVID-19 compensation, and for the other 50%, they can apply for EI. You can do it across your entire company or by group of or departments. So some perhaps in one department the activity has only dropped by 10%, but in another department it's dropped by 50%. You can have an agreement by groups of companies as opposed to across the entire company. You have to apply, and the processing time has been reduced from 30 days to 10 days. And the requirement for a recovery plan that shows how you're going to get back to pre-COVID-19 levels of activities have been substantially relaxed. Now let's move quickly to the different loans and loan programs. We'll only cover some of the main ones here today. The first is the Canada Emergency Business Account. It's a one-year interest-free loan of up to $40,000 available to small businesses and non-for-profits. The great thing about that program, it's interest-free, and you could have up to 25% of the amount forgiven if the amount is paid back by December 31st, 2022. And to qualify, you'll need to demonstrate that you had income between $50,000 up to $1 million in net income, payroll of $50,000 up to $1 million in payroll in 2019. So that is, but it's a fairly simple process to apply. You apply with your financial institution, and that loan is being made able, sort of fast-tracked. The requirements for it are pretty straightforward. Now, the next one is the small business loan. If you're making investments or if you have cash requirements, There is a program, there's 3 programs specifically. We'll run through them very quickly. There's a small business loans for your requirements of $100,000 or less. Again, you apply for that one under with the BDC. The second program is a working capital loan where your requirements exceed $100,000. And then the last one is a purchase order financing. And that is to cover sort of purchase orders, cash requirements. For now, I'll move it to Clara to discuss sort of the tax measures that have been announced associated with COVID-19.
Okay,
Clara?
thanks, Danny. Hey, everyone. Hope you're keeping safe and staying well. So against the backdrop of all the grants and subsidies that Danny just went over, this is really more for background than anything, and obviously cannot be of immediate use to you, but more of a medium-term consideration. First, really only got 2 key messages for you as it relates to key tax changes. The first is that nearly all tax filing and remittance deadlines have been extended or granted some sort of flexibility. And there are very few exceptions, but there are exceptions. So, while I'm sure you've heard of all the federal extensions for tax returns, there are certain exceptions like the payroll and certain indirect tax returns, which have not been granted an extension. So you'll want to be mindful of those to make sure that although, by and large, most deadlines have been extended, you'll want to check into those if you've got indirects or sales tax returns, or another one that also hasn't been extended are customs and trade remittances and deadlines. So in terms of flexibility and extensions, that also includes CRA collections, garnishments, appeals, objections, and that's both at the CRA tax authority level and the judiciary. So if you've got ongoing audits or perhaps an ongoing file at the Tax Court of Canada, most of these things have been suspended for a period of time. Again, a lot of the deadlines are a little bit different depending on where you're at in that stage, but just know that for the immediate term, a lot of these things have been put on hold. As it relates to the provinces, so they have more or less aligned with the federal CRA on analogous items. So that means, for example, if you've got a T2 and it's been extended to June, then chances are your corporate return for the provinces have been extended as well. So I note here, and Danny said things are moving really, really quickly, and that's especially true too for tax deadlines. So I had here on the slide that the Alberta corporate tax return had not been extended. That's actually been revised. So we found out on Friday that the return, the corporate tax return for Alberta companies has also been extended. Likewise with the federal return. So most items as it relates to provincial filings have more or less been harmonized with the CRA deadlines as well, to simplify things a little bit. And finally, on the extensions and flexibility front, everything that you can think of in terms of property and municipal taxes, education taxes, WSIB payments, a lot of health taxes have all been in some way, shape, or form either granted leniency on a case by case or some sort of blanket suspension to a later time. So for those, you really have to check on a one-on-one basis to figure out whether or not that specific tax has been extended. And the second message I'd leave you with is, whether or not this is a good time to consider opportunities. Maybe not immediately, but in a few weeks' time, because of all these changes, there's a lot of upheaval, a lot of turmoil. It might actually be a good time to recalibrate your tax position. Think about your losses. Can you trigger losses and carry them back to when you had gain years? Think about liquidity. Is it a good time to optimize your borrowing or your repatriation strategy or capital raises? We all know that values are decreasing in certain respects, right? Given business interruptions and such, that might also be a good time to consider doing taxable transactions or some sort of purification or transfers that would have otherwise, in better times and better economic times, resulted in larger gains. So this might be a good time to think about crystallizing those gains and keeping your tax bill as low as possible. So those were my comments as it relates to tax changes. I'll turn back to Leon at this point.
Thanks, Clara. And it's funny, you talked about those tax changes, and I've heard a few members talking about that in terms of recognize because the values have dropped, taking advantage of that right now. Before we head into the Q&A portion of this webcast, first, a brief note about PEO leadership from one of our members.
At PEO Leadership, I'm surrounded by other business leaders who challenge me to become better.
Les Mandelbaum, founder and CEO of Umbra.
Leaders really need to step outside their world and get new perspectives.
PEO Leadership is more than peer-to-peer advisory. It's a community of top executives with global experience.
Our retail landscape is rapidly changing. PEO Leadership has been vital in helping us navigate through this.
The time to step up and lead is now. Go to peo-leadership.com.
So I'm going to, there are a number of questions here. I'm going to ask Kelly to help me out on this. I'm going to go to Hashem first, because I know you got two questions, Hashem. If we could take him off mute, that would be great. Hashem, are you there?
I'm here, thank you.
Go ahead.
Great, thank you. So I have three questions. I'm assuming CEWS is yet to be approved by the Canadian Parliament. And I'm wondering when is that taking place? And I'm assuming there may be changes to the program as a result of the opposition parties sharing their needs or their requirements from the program.
I don't know if you want to take this one, Clara, but I don't know when the House will reconvene. I suspect there's a fair amount of collaboration amongst parties now, that any laws required to enact any of these programs are being passed rather quickly.
I agree with that, Danny. So there was a first round of legislation that came about, I think it was last week or maybe a week and a half ago at this point. Things are moving really, really quickly. To Danny's point, they will have to reconvene at some point soon just to push through the rest of these measures that we heard about. There's some draft legislation out there, and it really just depends on how much has been drafted so far and how much of it needs to be revised based on the newest announcement. So there's a lot of talk going around about how we've moved to this taxation by announcement regime where the PM steps out in front of his cottage, he says there will be a change, and then we're expected to sort of follow along, and it's very difficult because the legislation hasn't caught up quite yet. So it's a matter of time. It can't be too much longer.
Okay, great, thank you. And I just have two more practical questions. So if the workforce hours change from week to week, how do you arrive at the weekly earning for the calculation of the 75%? So that's one question, and then I have one final question after that.
Well, I think that's a great question. I think the government did make did in their announcement say that more guidance for determination of weekly remuneration has yet to be unveiled. So I think that may answer your question in time. Otherwise, you basically have to determine your total compensation as a general rule being paid on a weekly basis in your normal cycle times the 75%.
Right. Okay. And then my final question: we reduced the entire workforce pay by 20%, and many, if not most, of our employees claimed for employment insurance. So now we're going to be claiming for subsidy. Do we have to get our employees to stop the employment insurance and we fund the reduction in their pay? Because I'm understanding that we can't claim both the subsidy and employment insurance for our employees at the same time.
I'm sorry. It was a long question. I do apologize asking for you to repeat it, but didn't quite couldn't hear it correctly. Sorry.
So maybe it's just a summary is we reduced everyone's pay by 20%. They are now claiming employment insurance.
Yes.
I'm planning to apply for the subsidies. Can I do both, or do employees have to stop their employment insurance claim?
I would, so you're on a work sharing program right now?
We didn't apply for a work share program. We simply reduced everyone's work and pay by 20%.
Oh, okay. Well, I think you're, I think if you wanted them to get employment insurance on the 20%, obviously the work share program would have been, you would have had to apply for it. But the 75% will be on the amount that you're paying them during the period of March 15 to June 6.
Okay, so they can maintain their employment insurance claim, because I thought you can't get the $2,000 and the subsidy at the same time.
Yeah, that I don't have. I don't have the answer for that, unfortunately.
Thank you.
I don't want to. If you've gotten government direction on that specifically, then undoubtedly that's correct.
Okay, thank you very much. Thank you, Leon.
Oh, you're welcome, Hashem. I'm going to go now to, I believe it's Martin Day. Martin, are you on the line?
I am.
Okay.
I was just wondering, when I looked at the timelines for the 75% wage reduction, it seemed to me that the cutoff periods were like March the 12th, which was easy because the plan didn't get approved till the end of March. But the next one coming up is April the 12th. So am I reading it correctly that you have to be down 30% April over April? But how do you do that when it's the middle of the month that you become eligible?
You do when the portal is open, you are going to apply for every month, but the months that you must show 30% reduction are March, April, and May. So my biggest concern with respect to the months that they've chosen is that in the month of March, you may not have seen a full month impact of reduction in revenues. And so that may be the hardest of the 3-month period to demonstrate that you've achieved a 30% reduction. Obviously, the government was fairly clear that it did want to ensure that companies did not try to circumvent any rules and unduly took advantage of the program. But the reality is they also are asking you to look at your revenues, calculated on generally accepted accounting principles, and that's sometimes very difficult to do for small businesses. So with all of your accrual accounting that you need to do, best advice I would say is you'd have to probably apply some reasonable amounts of provisions for bad debt, and potentially adjust your revenues provisions according to some form of COVID-19 impact. So long as you're reasonable in those calculations, then and could defend them after the fact if you're asked to defend them, then I think that you should be fine. But you are supposed to the first month you're supposed to look at to apply is March over March, and not April.
Yes, but the next month, April, you can apply on April the 12th. Is that right?
Well, right now we cannot apply. You're right. We cannot apply for another 5-6 weeks. But you apply on those, let's say on the 12th. On April 12th, you'll look at what your revenues were in March, month over month. And you apply for that on April 12th. The next month, maybe middle of May, you'll have to look at what happened to April year over year.
Okay,
That make sense?
that makes sense.
Okay. I was going to ask Danny, just when we're talking about revenue here, and I'm just going to intercede with one question, and then we'll come back to the question. What about those companies that actually have received payments earlier and they amortize them over a period of time, like a year, which is very different than potentially their cash flow position? So for example, if they took a lump sum, $40,000 in January and had to amortize it over 6 months, their revenue would still look fine year over year, but their cash flow would be an absolute disaster.
That's fair, but I think, unfortunately, you know, I've had even a call with a company that's been around for about 5 years, a software development company, and they said, you know, we're being hit hard on, but you know, we also have support revenues that we're depending on, so we may lose any kind of ad hoc software development project, but we get ongoing support, so we won't see a 30% decline. So that incentive is not good for us. In the case of the amount of received in upfront, so long as you're continuing to provide services and you're truly earning, if it's been amortized over 6 months, 1/6 of the monies received, you should accrue 1/6 into your revenues for the month of March. If you're not able to deliver the services that you've been asked to deliver, then you would not accrue that into your revenues, and therefore may help you in achieving that 30% decline year on year.
That's great. Thank you. I'm going to go now to, I don't know, JR Bell 853. Are you on the line?
Hi, Leon. It's Joanne. Sorry.
Ah, Joanne. Good to hear from you.
My question's for Danny. Danny, it's back to your first slide around the Canada Emergency Wage Subsidy. It's the first time that I saw the point that it talks about employers doing their best to top up. It's the first time I see that they say to pre-crisis levels. So can you just clarify that a little bit? Because I'm concerned now our interpretation of the amount of money we're paying, the 75% that would come back, but what's the employer's responsibility? Because I have never seen the pre-crisis level in there.
Yeah, so it is very much, so I want to clarify a point. I may have misspoken earlier on the call when I said the 75% is the amount you'll be paying during the March 15th to June 6th. It's 75% of pre-COVID-19 levels in which the incentive is calculated on. And so you will receive 75% of that amount. But if you cannot afford to pay the employees any more than the incentives you're receiving, you're apparently, and they were fairly vague about that. I wish they were a little clearer. They do ask, and they made the statements on a couple occasions. They realize that not every company is going to be able to top up to 100%, but they do expect employers to do their part and do the best they can to top up to 100%. So they haven't really instituted any kind of clawback or reduction. They've been, I don't know if they've been purposely vague for it, but they have been vague about it. They did make the statement, a very clear statement though, that they would expect employers to kick in the other 25%.
Thank you very much for the clarification.
Our next question comes from Sharon Fender. Sharon, you on the call?
Hey there, how are you?
Good.
Okay, so if I'm understanding the loan correctly, businesses can apply for this $40,000 loan, and as long as they pay back by the December date, the 25% is forgiven, correct?
That's correct.
So in essence, why wouldn't any organization who knows they're capable of paying it back in a timely manner go after that loan? Because it seems to me, unless I'm misunderstanding something, that it's almost the equivalent of 10K for free.
I think that's it's pretty good. That would be my understanding. Yeah, I would say, I think every company that's eligible for it should probably apply for it. I would agree.
So from a tax implication, is there anything that we need to consider?
If there's what, sorry?
From a tax implication, is there anything that needs to be considered? I mean, it's interest-free, but how does it impact us from a tax perspective? The forgiveness part, the 10K.
Yeah, and this is where I'm going to let my colleague, my esteemed colleague, Clara, answer whether or not, I think I have the answer, but I'd rather it come from her, whether or not the $10,000 forgiveness is subject to corporate tax once the portion is forgiven. But I'm not gonna, I could take a flyer on it, but I'm gonna let Clara answer that question.
Sure. So I think this 10K free, it sounds too good to be true, it probably is. I do think it will be included in your taxable income in one way or another. So there are pretty complicated rules in the Income Tax Act as to how debt forgiveness is dealt with. It can, start with grinding a whole bunch of your tax attributes that are valuable, things like losses, things like the cost basis in your assets and your shares, and even in your subsidiaries' assets and attributes as well. And eventually there could be an income inclusion. So because it's not totally clear yet to me how this program would work, I would hazard to say that at some point there's going to be some sort of tax hit. I may be misremembering. I thought that the interest component was only interest free for a period of time, right? So to the extent that it becomes interest bearing at some point in the future, you'll also want to consider, of course, whether or not that interest expense is deductible to you. So that's another analysis as to the purpose and the use of the loan proceeds.
Oh, I thought it was a completely interest-free loan.
Okay, yeah, I'm not sure. Maybe Danny can weigh in. I thought I might have heard at some point, I could be misremembering, that at some point past the initial time period for repayment, beyond that it might extend to be interest bearing, but I'm not 100% sure.
So I'm on the website of one of the chartered banks, to remain nameless, not to say we have preference over one bank over the other, but to answer that question, in their FAQs, they say that if any amounts unpaid on December 31st, 2022, gets converted to a 3-year term loan at an interest rate of 5%. So it would appear that the interest is according to this bank, being waived for the entire period.
Okay, great. Thank you very much.
Thank you. Our next question is coming from Jamie. Jamie, could you come off?
Yeah, I'm off mute now.
Yeah.
So I guess this is a two-part question. Given that it's going to take some time to apply for this and get it, and we're looking back in March and then in April, let's say an organization does their best, they want to keep employees on under this program, but then they get to future months and they just can't keep, so they have to go on to short-term layoffs. Do we feel that being able to claim back on employees that you had at the earlier stage of this crisis will be acceptable, even though they might now be sitting in a short-term laid-off position by the time you apply? Because effectively, you might not be able to, if your intention is to hopefully bring these people back, but you need the money in which to do so, you're taking a lot of risk as the employer of whether or not you're going to get the grant or carrying your employees longer than you actually can. So I just wonder if there's an opinion or anything that's been written yet with respect to only being able to eligibly go after employees who are currently not on short-term leave?
This is Danny. I'll try to answer the question best I can. So I can't speak to the loans through the BDC or through chartered banks in terms of whether or not, to what extent all applications will be granted the funding. But I'm pretty certain, unlike your typical government grants or incentives pre-COVID-19, where government had an awful lot of discretion to approve or to deny any application to an incentive, I think it's fairly safe to say that any company applying to a COVID-19 specific incentive, like the 10% wage subsidy or the emergency wage subsidy of 75%, then so long as you've done your due diligence and you can prove you're down 30%, et cetera, you won't get denied. It's a matter of just applying for it. So I think your risk that you're taking is probably reasonably low if you were referring to those COVID-19 specific subsidies or incentives.
Okay, and then a second part question, do you think this is going to apply for people who are generally, they're employees, but they are on a variable compensation model? In my case, a lot of my employees are real estate salespeople who make commissions, and therefore what they get paid monthly isn't the same, but they are salaried technically, and they're employed by us. Do you think they'll be eligible under the same program?
Well, I think any income that's subject to withholding, yes, they would be eligible.
Okay, thank you.
The only income that they've identified as subject to withholding but would not be part of the calculation are severance pay, stock option, and use of corporate vehicles.
Thanks.
Thank you, Jamie. Lawrence, I think you may have had a very similar question, but come on and go ahead.
Yeah, I mean, let me just build on that last question. Because if those real estate people, or in my case, my commission sales people, do not make any money, say from middle of April to the middle of May, just because there's no business, how is that calculation then done on the commission part of their pay?
I'm a little bit stumped. I think it definitely has to be, I mean, that's something I could maybe take to the side and research and get you an answer afterwards. I don't want to mislead you.
Yeah, that would be great.
It is a very specific, unique question that I certainly they've given no guidance on yet. There's a couple of things they haven't given guidance on, and so if you don't mind, let's make sure that we get your contact information through the PEO organization. And my contact information is also now showing, so you can send Clara and I an email, and we'll research the answer and give you the answer after the call. But there's a couple of things, speaking to the point I made earlier, that they still have to come out with some clarity on, which is how do you deal with companies that are starting up, and how do you determine their, obviously if you're a startup last year and you started a brand new business last year, even with COVID-19, you may not be able to show a reduction in 30% because your revenues are going up and we're trending up. They also were very clear that they have not provided clarity on how do you calculate the reduction in income for non-for-profits and charities. So there's still some guidance to be provided by government. Hopefully these will come soon enough. I'll see what I can do in terms of giving you answers. If you can outline in an email precisely, again, what you've provided, but if you have any additional information you want to share with us on how you pay your commission people that would be potentially feel helpful.
That's great. Just as a reminder, I think we are recording this call, so you'll actually be able to see a feedback loop of the call, or you'll be able to see the recorded call with the slides as well. And we will send out the slides to everybody on the call. We have your emails. Danny, come back to you with another question, or maybe Clara too. Just arms, for those that are not accountants here, but arm's length versus non-arm's length, and the impact both on the 75% subsidy and the 10% subsidy. Are they different? And maybe just start with the definition of arm's length versus non-arm's length, because there's a lot of owners on here.
I mean, Clara could probably be in a better position to describe arm's length versus non-arm's length. As defined in the Income Tax Act. Did you want to give it a shot, and then I'll pick up from there?
For sure. So arm's length and non-arm's length is basically a mixed question of fact and law. So the answer is always, unfortunately, it depends. There are a couple of rules that will deem taxpayers or entities or parties to be non-arm's length, and that's typically the case for entities that are related. And so related is a whole other set of definitions, and typically includes entities that are controlled, 50% plus one de jure control. And if that's the case, they're related. And then if they're related, they're typically deemed for income tax purposes to be non-arm's length. So that said, there's also another provision that will include sort of de facto non-arm's length dealings. So beyond the specific de jure relationship between parties, if there's found to be some measure of influence or acting in concert, then in those situations, you'll be found to be acting at non-arm's length. So unfortunately, the question, it depends, and really it's a question of looking at the legal relationship as well as the factual pattern.
Okay. The reason I'm asking the question is just because of, a lot of people may be owning their operating companies through holdcos, for example, but they're also an employee of that operating company. So they wonder, can I get that 10% or that 75% wage subsidy, not just for my employees, but myself as well, because I am an employee.
Right. Right.
So
and in that situation, typically, if you've got a shareholder who's also an employee, it's probable that all the parties in that situation are non-arm's length because the employee is also a shareholder and so therefore controls
the business.
Right.
Now, Danny, on the 10%, does that apply? I know on the 75% they talk about you have to be at arm's length, but at the 10%, does it apply?
I haven't seen specifically apply in anything written from the government on the temporary wage subsidy. It's referred to in the 75% rules and guidelines, that is. And if those of you have read it, it basically says a special rule will apply to employees that do not deal at arm's length. They haven't really provided a lot of clarity what that special rule is, whether or not they're to be excluded or not, or whether there's a different cap. So I think it's safe to say that, more clarity has to be provided on that point. It's something that you'll need to factor into your calculations when you can apply, 3 to 5 weeks from now. So that's definitely something on your checklist to see when you do apply, how you do that calculation for arm's length employers. It's a great question. Unfortunately, government has not provided the specifics yet on what that special rule is.
Danny, can I just ask you, and one just further question on this, because this will really hit people actually on April 15th, right, with the employee remittances. On the 10% piece, if you are a shareholder, or you're not arm's length here, would you withhold 10% of your, hold back 10% of your salary too, or the employee remittances on that?
I would, because I haven't seen anything on the 10%. It's only referred in the 75% calculation. So the answer is yes, I would, until I read otherwise.
Okay. I think that's very helpful to almost a lot of people here on this call today that will be making remittances. So I think I've covered, I'm looking for if there's any last questions here. I think I've gone through the group chat here. I think we've picked up everyone's question. So let me do this. Thank everyone for participating today. Like I said, these slides and this whole conversation will be available on the PEO Leadership COVID-19 response page, as well as all these other resources. So we've been doing calls and recordings over the last several weeks on different issues and different opportunities. So they'll all be available there. The second thing I will leave you with is this Thursday, we have Arden O'Connor joining us. So she's out of Boston. She runs an O'Connor professional group. I've had her come in and speak to my Tiger groups a couple of, actually last year. She's a Harvard graduate. And what she was really what she'll talk about a little bit is the cabin fever piece. So talking a few things. One is executive stress, handling the stress in the environment that we're in today. And as every week rolls on, I imagine the stress is building. So she'll talk a little bit about how do you relieve, how do you manage that stress. She'll also talk about, you know, week 5, how are you doing in terms of working with your kids and your families in the same house without going insane. So really trying to provide us with some hints, some ideas that will allow us to get through these challenging times. So I urge you, if you get a chance, she's absolutely fantastic, and Thursday's call will be open as well. I think we're allowing 100 participants into that call. So on a final note, I just want to thank Danny and Clara again. Your insights, I knew you wouldn't be able to answer all the questions because the government just likes to play with us and keep changing things. But you really did a fantastic job answering a lot of these questions for our members and our guests today. Thank you very much.
Thank you.
Thank you, everyone.
Okay, so on that note, thank you all. I wish you all a great afternoon and a great week. Stay healthy and stay in isolation. We'll talk to you all soon. See ya.